Hello everyone, it is Evan here from the Trade Risk on Friday, December 29th, 2023, last trading day of the year. We're about to close out a blockbuster year for stocks. Hope everybody had a wonderful holiday week. Very light trading this week. We got New Year's coming up. Happy New Year's. Let's dive into some of the takeaways, the numbers. We're going to look at some big picture stuff this week to round out the 2023 year. And we're going to kick things off here with our usual view. Warden TC 2000, that's our charting platform. They are running a promotion discount trial period here. If you use the link in our description of this video, you can get access to their platform and take a discount off your first month. We also have lots of cool stuff built for TC 2000 traders on our website, thetraderisk.com. So if we take a look here at the 1 week returns, again, a mostly positive week here for stocks. I believe I'll count in just a little bit. The S&P 500 is on its 9th consecutive up week, which is really impressive. Lots of ground covered. But you can see on the week, the Dow Jones was the top winner here, up 0.82%. The S&P was up 0.32, Nasdaq 0.3, and the Russell down slightly here. Take a look at this column though. Here is our 1 year returns. It was, again, just an absolutely stellar year for stocks, 57% for the Nasdaq 100, super impressive. And if you recall, as we started this year, right, rewind the tape to January of 2023, we were in the doldrums of a bear market, recessionary calls, higher for longer. There was pretty much, kind of doomsday thinking and just yield spiking, all the bad stuff happening. And of course, the market, just in the face of all of it, continued to rally relentlessly this year. There were some fits and starts, some pullbacks, but generally speaking, I'd say this is a very hated rally for the most part here, myself included at times, right? Thinking about everything that was going on in markets, saying, how can stocks continue to rally? But there they sort of did, and we're going to look at some charts here in just a moment. You can see volatility going out for the Nasdaq 16, down almost a half a point, and the VIX at 12.4, a super low reading here for the new year. Now, if we take a look here at sectors on the week, again, mixed bag, but mostly positive. Consumer staples, utilities, and healthcare were actually the best performers this week. So up 1% for that sort of cohort of stocks. We had energy, discretionary, and materials, the only three negative here. And then once again, I'll just draw your attention to the 1 year performance here, and I'll sort it by the strongest to weakest. Three sectors closed this year in the red: energy, consumer staples, and utilities. They were the three standout negative places to be in the market this year. And again, it was a very polarizing sort of year here where you had big winners, big losers. Technology up 58%, basically the Nasdaq 100. Communication services, consumer discretionary, just monster years there, 40 to 60% basically. And then you just had a lot of kind of market average performance here: industrials, financials, materials, all up, kind of the low double digits, high single digits. So kind of a mixed bag there, but generally speaking, again, most sectors participating nicely. Our sector trend here, so this is our smart trend filter built for TC 2000 and TradingView. This here is, again, mostly the same uptrends across the board. We've had some select standouts here. You can see energy weakening up a little bit, right? Utilities in tougher shape here. Generally, though, most other markets in positive uptrend territories. Now, if we take a look here at market breadth, again, something we've been looking at week over week here, it has been now the same old, and the same old is positive news, where if we look at the bottom pane here, this is the number of stocks hitting 52-week lows in the NYSE, and you see it's basically non-existent. It's just treading water down here. Looks very similar to what we had for a long stretch of this year, in fact, which was the number of stocks hitting 52-week highs, which were just, very small very small numbers, narrow leadership this year. And of course, right around that beginning of this rally, the early November time is when this ratio started to flip. We started to get an expansion of stocks hitting 52-week highs and then dry up of stocks hitting 52-week lows. So that ratio continues here. And if we look at the percentage of stocks above a 200 period simple moving average, we're still up in the upper kind of positive territory here, 68%. And for the percentage of stocks over 50 SMA, we're still in the, again, pretty extreme levels of 77% of stocks. Now, if we take a look here at IBD, so shout out to Investors Business Daily for being a sponsor of the show all year long. Thanks to IBD. You can support the show, support IBD with a link in the description of this video. This is their IBD 50 top 10. I think this list might be actually a couple stocks off this, not up to date for the last few days, but generally speaking, kind of a mixed, tougher last week of the trading year. Some of the behavior we saw this week, especially here on Friday, was just some of the big winners this year. Really just kind of saw some maybe profit taking, locking in some of the kind of balancing of perhaps tax lost, rebalancing, harvesting, and all of that fun stuff. So we saw some of the biggest winners selling off a bit here in this last week, but generally speaking, again, a pretty strong year for lots of these stocks. So check out the link in the description to get access to IBD's 50. If we round out here and take a look at some commodity performance, natural gas up slightly, gold up 0.5%, copper up slightly. Everything else was in the negative here. Dollar index down slightly, silver down 1.5%, and oil down 3% to close out the year. If we take a look here at treasury yields, again, mostly positive. You can see again, ever since November, again, that magical date, first week of November, last week of October is when basically we had things bottoming and topping. And in this case, the treasury yield index here, all topping at that period. Downtrend still in place. Stocks love it, growth stocks particularly. And that's what's helped fuel a lot of this last quarter rally. So there you have it. Let's take a look at price action here. And again, as we talked about at the top of the show, 9 weeks in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 weeks for the S&P 500 to the upside. That's a pretty good streak there. And you can see we knocked on and tested those prior all-time highs. Didn't quite close the year at those highs, but pretty darn close. And this has been basically a round trip year. Again, if we go back to January, we started the year right in here at S&P 3800. We closed at S&P 4800. It was such a different environment in the first half of this year, first quarter of this year. We were stuck in a range. We were stuck in this miserable sort of macro environment where it looked like higher for longer was sticking around and a recession was coming, and the market seemingly had dodged all of it throughout this year and continued to grind up. We had a pretty tough pullback here from July into the end of October. Again, just looking at this big picture, and that's what really launched us higher here. As we tracked it in real time, we talked about these series of gap and go days, momentum building one after another as the chase and the squeeze really got into motion here. We talked about this beautiful consolidation through time. Markets broke out, consolidated again, broke out, and got back to their prior all-time highs. Now let's clean this chart up for a second. Let's take a very big picture view here as we look at the market, and I'll even see if I can clear out some of these lines. You know what? We don't need any of this. Let's erase all on this board. Okay, so nice clean chart here. S&P weekly time frame. Again, you can see we had just again this big kind of correction here throughout 2022 bear market. We formed a bottom, we broke out, we put in a higher low really right in here at the beginning of November, and then we have ripped higher here. If we go to a monthly chart, this shows an even better picture. Take a look at how nice and orderly and clean this big picture looks here now as the S&P 500 is on its second month up in a row. It's back to its prior all-time highs. I would expect, maybe a little stumbling around here. Let's face it, it covered a lot of ground in pretty short order, 4,800 or so. Expect that to just be a spot that the market wants to dance around from, but if we can start clearing above here, we're at all-time highs. We're at fresh, clear highs here for markets. And again, I still feel like, there is a lot of resistance to this market. It's still a rally that I think most people sort of hate or are confused about, or are still comfortably earning, 4 or 5+% in money market accounts for the time being anyhow. And they are happy with that. But if the S&P 500 continues to rally like it has been in its recent path, then of course you're going to get more and more sort of fear of missing out, kind of chasing action occurring. So when I look here at the big picture, this is a logical spot for the market to pause at, and it's covered a lot of ground. 9 weeks and up in a row is no small feat. So a pause here, maybe to start out the new year, I would welcome it. That would be great. A check back even to say 4,700, which was the sell-off lows here on Wednesday, December 20th. If we could even, kind of fall back to this area, 1.5% or so, chop around for a little bit, form a trading range, and then break out and challenge these 4,800 highs. That would be, my personal sort of favorite path that the market could take here as a trader. But of course, the market does not care about my opinion or what I want. So we'll take it one day at a time. But I would love a little bit of a pullback here. It looks like the market might want to, as it started to kind of roll a bit here on the end of the trading year. But again, we had a lot of perhaps tax loss harvesting and balancing and very light volume, generally speaking. So for the S&P 500, bulls very much in control. Again, the worst thing that I can find with this market is just that it's up 9 weeks in a row, and it's overbought, let's call it, even though that term is a little bit loose, which I don't love to use. But that's kind of the biggest negative here, is just that we've covered a lot of ground so fast. Otherwise, things continue to look technically very strong. If we take a look here at the Nasdaq 100, once again, big picture view, you can see that we are back to the all-time highs. In fact, we kind of breached them, and we did close at new weekly closing highs these last 2 weeks for the Nasdaq 100. We totally, recovered all of the bear market and slide from 2022. And again, if we go to that monthly time frame, that super long picture view here, you can see that we have, put in what looks to be some type of higher low here at the beginning, late October, early November. And here we are breaking over the prior all-time highs. And if we can continue to maintain this strength, big picture here, we are back on track, back to clear blue skies with no overhead supply. So again, I would welcome a little bit of a pullback here in the short term, maybe back to, again, 400 or so, the low 400s. That would be wonderful to reset the froth a little bit. But generally speaking, bulls are in control. And of course, the Russell 2000, this has been the story we've been focused on here the last few weeks. This is, in fact, now trying to break out of this bigger range that it has been in. We talked about this in our last handful of videos, from the low end to the upper end here. Small caps finally starting to participate. And big picture, if this turns into just one big, kind of accumulation pattern here, this range, which this breaks out from and starts moving back up to the old 2021 highs, that would be a nice, kind of small cap resurgence, breath, stock pickers kind of market here going into 2024. That would be really nice to see some of the rotation fall into this category here. Again, a lot of these stocks do have more debt, do have tougher balance sheets. And if we are going to see interest rates come down, if we are going to see yields continue to fall, then financing that debt and, taking on new debt is going to be very beneficial to the smaller cap companies. So we're going to keep an eye on this. Breakout is, TBD. It's challenging the top end here. Again, pulling back, resting a little bit, breathing is welcomed, but we don't want it to go too far, right? If we can stay above 195, 196 or so and keep that momentum intact, that would be ideal for the Russell 2000. So keep an eye on this area here for the new year. And that is the major market run up. Now, stocks did impressive this year, but so did gold. Gold was very impressive commodity as well. So you can see it was up 12.71%. Of course, nowhere near what Nasdaq did or the S&P did, but it is now at all-time highs as well. for the nice shiny yellow metal here. And again, you can see it's been consolidating for a few years. So there's fuel in the tank here as this gets back to all-time highs. And so gold is something that I think is worth paying attention to as well. Again, fits a lot of those portfolio allocations. So good year there for gold. If we take a look here at oil, you can see that we have slid and we have, done some damage here over the past couple of months. Again, when everything reversed in the start of November, late October, you also saw oil top. Again, all of these trades kind of going hand in hand with one another in terms of flows, but oil now comfortably back into really the first half range of 2023. So when you look at that big picture for USO, you can see it's just kind of back to this nice, on balance level here where it seems to comfortably trade in this range for USO, call it between 60 and 80. So, not a whole lot of directional clarity here, mostly just kind of a wait and see type of market. I don't really have any good insights or edge or really thoughts on where this could be going. It just seems like it wants to be kind of trapped in this sideways trading range. So that's really its performance this year. Again, you really got to look at the future spot, but oil USO ETF was down 4.94% this year. And if we go to lastly, we'll look for big commodities. We'll look at natural gas, which just had an absolute horrendous year and mostly accelerating lower at the end of this year. It was down 64%. Again, this is the UNG ETF. It's a pretty terrible looking chart, all things considered. There's of course some roll drag here and lots of other factors with ETFs and commodities, but generally speaking, very tough spot to be for natural gas traders, investors, buyers this year. What else do I have on the list for you? So rounding out, I was going to look at some of the strongest stocks, but I do realize that would then turn this video into something very long. But I was going to say, let's take a quick peek here at the strongest technology stocks this year. Okay, so I've got it sorted on technology stocks specifically. I'm just going to go to a weekly chart. A couple of these names, we had some buyouts here at the top of the list, but I thought Carvana really kind of told the story and ethos of this year pretty nicely here, considering this was a company that everyone was dunking on at the start of this year and end of 2022. And I think this really kind of, summarizes sentiment nicely. Everyone was doing laps on this company saying, why does it exist? It's going to be bankrupt. Everything was kind of left for dead here. And this had just an absolute monster comeback, 1,300% move off of the opening price of this year, which was around $4, closed the year at $53. Just an absolute brutal move to the upside here. And we had lots of other companies, a lot of these companies, I don't know the story behind, and some of these names are not familiar, but we had plenty of stocks in this technology sector that were up 1,000%, 900%. We had some miners here, so some Bitcoin miners making the top of the list here, as well as crypto was in just an absolute, kind of storm lower of FTX bankruptcy and Celsius going under and Silvergate and all the debacle with central exchanges all going under and under litigation. Bitcoin was another place in this market that really kind of came back strong. So a lot of those miners are showing up here as top performers in technology this year. And then, of course, the big story was, AI when you had NVIDIA. And you had many of these heavyweights here, which were making huge moves, again, up 250% for such a massive company, now over $1 trillion. Just so many stories to track, so many massive moves this year in this space. And looking through some of these stocks, I think is kind of helpful just to see where they came from, thinking about the stories, the sentiment, and how you can use your own reflection process on these particular stocks and just kind of thinking about the narrative, positioning, and how you can take advantage of them as traders going forward is always a worthwhile exercise. And it really just never ceases to amaze me to look at these stocks, figure out, where they were, what people were saying about them at the time, and then just where they moved. It was just, again, a really hallmark here with lots of very big moves. And so as we look forward to 2024, I don't have any other charts in front of us or any other big calls except for, look, market looks good. Strength is continuing. We are a little bit frothy across the board, but that doesn't mean we have to fall apart. Keep an eye on interest rates. Keep an eye on some of these leading sectors like semiconductors and technology and AI and all of this that's driving a lot of the narrative right now, as I think it's still going to be kind of continuation into 2024. We get lots of new flows in January, so it'll certainly be interesting to see how things start in the new year. And of course, we got elections towards the end of the year, which the market will probably very quickly start to be thinking about pricing in, and lots of chatter, of course, will be on the elections, not only in the US, but across worldwide. I think there's lots of different elections happening and political, potential changing of the guard for us to all think about and dissect later this year. So that is it for me. I hope you had a wonderful 2023. Thanks again for spending your Fridays or Saturdays or Sunday mornings listening to me rant on for 20 minutes. It's been a pleasure here. Episode 712. As always, every Friday, an objective weekly tour around markets. Thanks so much for tuning in. Have a great and safe and healthy, happy new year, and we'll see you back here in 2024. Take care.